Hi guys, in this video I'm going to do a technical analysis of the S&P 500, which is ticker SPY. The S&P 500 is a basket of 500 stocks. It tends to be a good gauge of kind of where overall market sentiment is. It's what a lot of investors and analysts look at, kind of judge the general levels of the market. Um, this one we're going to do a technical analysis, so we'll start here. You can see in the top window there the Bollinger Bands. These were created by John Bollinger. They show a general kind of price range of the market and market prices at any given time. In this one, it's two standard deviations, so in essence, market prices are going to fall, between that top line and the bottom line about 95% of the time. So you can see here every time that the price, gets up near the top of those Bollinger Bands, the price tends to pull back and vice versa. As the price gets closer to the bottom blue line, prices tend to go up. And this chart shows you the 20-day moving average of the S&P 500, which is $302.50. You can see that the current price, it closed on November 8th, Friday, November 8th at 308.94, and the 50-day moving average is 298.66. So, in essence, as we kind of look here, you can see the market price. And again, this is a daily chart, so it shows you over the last 123 days the prices of the S&P 500. Now you can see those little candles there. Every red candle was a down day. All the green candles are up days. And the 20-day moving average is that blue line in the center there. The 50-day is the red line there. So you can see that's a good way for traders, market analysts to look at the general price range and moving averages of the S&P 500. So the 20-day is the previous 20 trading days, the average price. The 50-day is the last 50 trading days, the average closing price. So as you can see here, as we come towards the right of the screen, the 20-day moving average is above the 50-day moving average. And, given the current prices, at 308.94, we're getting to be towards the top end of the Bollinger Band. So is there a market pullback coming? I don't know exactly, but it would appear to be, the odds would say that yes, there is. Now, when that is and how much, who knows? But, based on, looking at it from a technical standpoint, my guess would be, based on what we're seeing in the charts here, that there would probably be a pullback coming over the next, say, 1 to 3 months. Again, hard to say how much that will be, but as the prices, become overbought, and as it gets closer to the top end of the Bollinger Bands there, all the buying has been exhausted. So at that point, there's lots of sellers, there's few buyers. Buyers dictate, the prices, and the price tends to move lower. Vice versa, like as you can see there, like in the beginning of October and the beginning of August, at that point, there was a lot of selling. The selling had been exhausted at that point. A lot of buyers come in, there's few sellers, so the sellers dictate the price, and they start setting higher prices, and then the price tends to go up. So this is just a good way to kind of get a sense of, where our price is headed in the future if you are a trader or an investor. You can see the RSI there. That is a relative strength index, and that just shows you the price strength. Anything over 70 is, tend to get into overbought conditions. And again, the buyers, there are few buyers, there's lots of sellers, and the buyers dictate the price kind of at that point. And the selling, they're selling, and there just is oftentimes a pullback. So anytime you see an RSI above 70, more than likely there's probably a pullback coming. And as you can see, kind of looking at the charts here, again in the beginning of August, that RSI had drifted to, just under 30, and then over the next month and a half, there was a slow price increase. And again, happened again around the beginning of October. The RSI had touched close to 30, 35, and toward the low end of the Bollinger Bands, and then there was an upward move in the index. The 2-day RSI, that's kind of a shorter term gauge, just kind of to see how severe is the pullback or the buying spree. That you look at 595, anything over 95 tends to be kind of in the short term more extreme overbought and oversold conditions. Anything over 95 would be overbought. Anything below 5 would be oversold on the 2-day. The ATR, that is the average true range. That shows you the average price of an index over a given day. So, over the last 14 days, that's averaged about, a range during the trading day of $2.42. You can see it got towards a high there of around 4 in that beginning part of August. Kind of shows you a general sense of the volatility in the market. You can see right now towards the beginning part of November, that range has gotten smaller. Volatility has decreased. Volatility is, a lot of people refer to it as the fear index. Anytime that the volatility goes up, there is a higher volatility in the market, meaning that prices fluctuate more. When volatility is down, there's less volatility in the market. So tends to be when the volatility is decreased, there's less fear in the marketplace, and that's why you see every time you get a major sell-off or a pullback, volatility spikes, fear goes up, and so that's a good way to kind of get a sense of what's the market doing, what's the sentiment in the market right now. Volatility is very low. Prices are pretty stable. Prices are elevated. So that gives you a good sense. You can see there too at the bottom the IV average of 9.46. That tends to range for a index like the S&P 500. Again, you can see over the last 123 trading days, it's ranged from about 8 to 21. Anytime you get a IV of say 20 plus, probably a big sell-off, a lot of volatility. Anytime volatility is low like it is now, pretty stable. There's no big thing in the market that's causing panic or news headlines or anything like that. So again, this just kind of shows you where the S&P 500 is. It gives you a good sense of how to do a kind of a basic technical analysis on the stock. Again, my take on it right now is, we've had a, price increases over the last month, getting towards the top end of the Bollinger Bands. My sense would be that, again, the market could go up another 5–10%. Who knows? But based on the technical analysis, probably a little bit of a pullback coming. So hopes this helps you guys. And thanks for watching, and I look forward to seeing you on the next video.